Good morning, everyone. Welcome to today's webinar on RM3731 Insurance Services Framework Agreement. My name is Agnieszka Gajli, and I'm the category buyer at YPO. Before we get started, I would like to go over a few items so you know how to participate in today's event. You have all joined this webinar in a listening mode only. You will have opportunity to submit text questions to me by using the question control panel. You might send in your questions at any time during presentation, and if there is enough time left, I will try to answer all the questions, but if not, I will create Q&A document and share it with everyone after the end of the webinar. So today, you are going to learn about how to use the Insurance Services Framework Agreement and how to get the best value from it. You will learn who the insurers and brokers are on the framework agreement and how they operate. You will learn as well why do you need a broker and how to choose one. I will start with some general information about the framework agreement. The framework has been established in partnership between 4 buying organizations, CCS, YPO, ESPO, and NIPO. CCS is the contracting authority and YPO strategic partner, leading as well on behalf of ESPO and NIPO. It took us nearly 9 months to put this framework together, to successfully engage with brokers and insurers, as well as customers, to ensure everybody's requirement is covered in the specification. The RM3731 is a second-generation framework. The initial one, RM958, was the first national agreement to access insurance services by the public sector organization. The framework won several awards, including the CIBS Best Procurement Award. There were more than 300 customers that use RM958 framework, achieving in total 10 million savings. The framework went live last year on the 1st of March. The duration is for 2 years with 2 options to extend for additional 12 months. It is open to any public sector body within the UK. It can be accessed by wider public sector, local authorities, emergency services and blue light, health organization, charity organizations, as well as central government. The estimated auto expenditure is 370 million, and when you're accessing the framework agreement, it provides you with assurance that you are accessing a fully compliant framework. All suppliers are FCA approved and have been through a rigorous tender exercise. When accessing framework agreement, customers will have access to standard documentation and templates, to things like a framework user guide, call of terms and conditions, especially on lot 2, brokerage lot, which all suppliers agreed to. One of the most important documents is Supplier Metrics. It's available to customers after return of signed non-disclosure agreement. It doesn't commit you to use the framework. It's a protocol we need to follow, and it just ensures that you will keep the pricing information confidential. So always, when accessing the framework agreement, please ensure you have the latest version of the Supplier Metrics. Another document that might be of interest is the risk profile document. It's something we established in partnership with insurers, brokers, and customers. It can be used as a starting point to ensure you are disclosing all information required under the Insurance Act. I'm just going to show you how the Supplier Metrics document looks like. It's a live document, and the document will provide you with a list of insurers and brokers and classes of insurance they can offer under the framework. You can use it as well to identify capable providers before you undertake further competition. Relevant to the wider public sector lots are Lot 1, Insurance and Support Services lot. We have got 26 insurers appointed. And Lot 2, Insurance, Brokerage and Support Services, with 12 brokers appointed. I will talk to you later on how you can access those lots, but at the moment I would like to focus a little bit on the classes of insurance. Customers have access to a wide range of insurance cover through the framework agreement under the 6 main headlines: liability, property and construction, travel and personal accident, motor, and general specialist covers. If we talk a little bit about property insurance, the market is looking really well at the moment. One of my customers has recently achieved 70% savings on main lines of risk, with the biggest one being on the property. We are now seeing up to 5 quotations on a typical borough council property program. So we're seeing quotes from Aspen, Maven, Protector, RMP, and Zurich Municipal. Contracting authority are achieving best results if they are willing to take some levels of self-insurance. Motor risk, there is very strong competition from established insurers, RMP, Travelers, Zurich Municipal, with new competition coming to the market from Maven and Protector. Liability risk, currently extremely challenging market due to high-risk claims, social services, and late notification of claims. We are seeing some insurers breaking the long-term agreements. And in terms of specialist covers, I'm sure you all have heard about cyber risk. It's a very hot topic for the past couple of months now. So please be prepared that the brokers will try to challenge you on that risk. Through the framework agreement, customers can as well access a comprehensive list of support services which can assist you in your insurance placement and provide support in your claims and risk management. This is only an example, but we do have 24 different associate support services covered by the framework agreement. So who are the insurers on the framework agreement? We do have a very good mix of insurers. Key market players as well as specialist insurance companies are part of the framework. The market looks very different from what it did only a couple years ago. There are new players in the insurance market, and the old insurers are more keen and more comfortable to underwrite risk for public sector organization. The consolidation in the market happens all the time as insurers and brokers merge. When you look at those old insurers on the framework, it's good to understand that you will never receive 26 quotes. It doesn't matter if you use the framework or if you do an OJO tender. You will never receive a 26 response from the insurance market. And this is because insurance companies vary in the risk appetite. So just for example, CNA and Hardy, they are both part of one company now. However, the CNA likes high frequency of claims. However, the claims should be of the low value, but they are more aggressive comparing to Hardy, who likes high value of claims but less frequent, and they tend to underwrite risk for police and fire. Insurers vary in the sectors they are interested in. So just as example, Tokyo Marine, their main focus is on police and fire authorities, especially on property risk. ACE European Group, they like to bid for local authorities and higher education sector. Travelers, they like to bid for local authorities, police and health organizations. Some insurers are managing general agents. If you think about the broker is there for a client. Managing general agent is there for other insurers who don't like to be involved in the public sector risk or public sector tender exercise. The great example of managing general agent is Risk Management Partners, RMP, who co-insure with 5 other insurance organizations. 4 of them are being part of this framework agreement as well. So just for example, you will never see a quote from QBE Insurance, but they will quote through RMP on the motor risk and liability risk. Another great example is IAG, who will underwrite 90% of the property risk through RMP. So you might ask a question why IAG and QBE are part of the framework if they quote through RMP. And the reason being is that RMP focuses on local authorities, on education, on blue light and emergency services. They don't really deal with central government. So for those two organizations, IAG and QBE, to bid for central government risk, that they had to make a choice and be part of the framework agreement. So the most important thing I want you to remember about those insurers on the framework is that there are 26 insurers. 24 of those 26 are broker markets only, which means that they require a broker to approach them for quotes. They don't have capacity and capability to deal with customers direct. 2 of those 24 insurers are managing general agents. I just talked to you about RMP. They've got in their supply chain 5 other organizations. There's another one, Maven Public Sector, who co-insures with 4 other organizations. So through managing general agents, we kind of expanding the supply base of the framework agreement. We have got as well one direct insurer, which is Zurich Municipal, and 2 insurers who are able to deal directly with the customer and through a broker, and those are MAPS. They are motor protection, motor accidents protection services, and Together Shore. I will talk to you a little bit about new market participants. There is a Maven Public Sector who is managing general agent. They are owned by Aon Underwriting Managers. They've been on the market since December 2014. They bring new capacity to the public sector insurance market. Their appetite is on property, casualty, fidelity guarantee, and motor for local authorities, police, fire, and rescue. They started to win business now, and they co-insure with Aviva, Amlin, Excel, and Liberty. Another new market participant is Swiss Re. This is a well-established insurance in the market. However, historically, they would only consider large property and public liability risk with high deductibles. They will now consider all types of local authorities which meet their risk criteria. So for example, if the customer can show ability to demonstrate a commitment to risk management and willingness to work in partnership with insurers, they actually might consider your business. They can be very competitive, especially in property. They still got very selective approach, but they will quote for property, employer's liability, public liability, and public liability. They work closely with a company called Kerberos Consulting. They are their bids managers, and they provide them with insight into risk selection. Just the last one, new market participants, it's Together Shore. I put here a question mark. They are planning to be managing general agent. They've got capacity to deal directly with a customer as well as through the broker. They are going through some commercial arrangements. At the moment, they are able to bid for a motor risk through their insurer called New India, but they are planning to bring more capacity to the market. Who are the brokers on the framework? Again, we have got key players on the framework, such as Aon, Marsh, Willis, Arthur J. Gallagher, as well as small, medium enterprises and specialist organizations. So, for example, Lucas Fettes, they are specializing in education and charities organizations. Brian Johnson, they work with NHS organization and specialize in motor risk. The same GMG, they are specializing in the motor risk. Henderson, their main focus is on the higher education sector. JLT Specialty, They've got a massive knowledge and experience in the social landlord sector. So why is this framework supported by insurers and brokers? The main reason being is that the tender fatigue is eliminated. It does avoid some of the complexities associated with the full ARJU tender. The comments we receive from insurance industry are that participation in a tender is costly in terms of time and resources, and both brokers and insurers might decide to decline to participate if they feel there is not a genuine chance that they can be appointed. So through the framework agreement, you are saving time and you're saving resources, not only for yourselves, but as well for brokers and insurers. And insurers, they like to focus on underwriting the risk rather than paperwork. They don't like to answering questions. They don't like to be involved in a tender exercise. They don't like to answer questions on sustainability, environmental policy, health and safety. They are specializing in underwriting the risk, and that's why they are very much supporting the insurance services framework agreement. And again, this is a very simple route to market when you only appoint one broker who approaches every insurer. Another benefit is the ability to enter into unlimited long-term agreements. The terms and conditions on silent on the period of LTA, and your LTA with a broker does not have to be in line with LTA with your insurer. One additional benefit of the framework is that we have built in an obligation on insurers to provide contracting authority with the confirmed claims experience no later than 60 days prior to expire of the current policy. This is really important, especially for the people who are already using the framework, as well as the customer who use the initial RM958 framework. So from experience, we know it could be a very time-consuming to get a full confirmed claims and experience document to be able to go out to tender and share it with other potential providers. So I would encourage customers to request it from an insurer. They are obliged to disclose that information to you within a really good time limit. So framework process. Basically, customers have got a choice to do direct award or for the competition to appoint a broker from lot 2. There are 12 brokers, and that one appointed broker then undertakes for the competition on behalf of the customer under lot 1. So technically, customer appoints a broker from lot 1, and that one broker goes out to lot 1 insurance, to all insurers on lot 1, and undertakes for the competition on behalf of the customer. If we can just stop here for a minute and talk about this process and why we choose this one. In a traditional multi-broker exercise, a number of brokers approaches the market for alternative quotes, but this doesn't generate the best results. Insurers are becoming disinterested as they can only provide one price. So the traditional multi-broker exercise concentrates on price, not suitability of cover. The approach we use for the framework agreement is called conceptual. It allows direct comparison of each broker's knowledge, and it encourages innovative design. What's most important, it removes uncertainty of which insurer responds to each broker, and it provides clarity in terms of who will evaluate quality of cover. There is one important point here, is that the broker appointment should really happen 6 months before the insurance placement. So it's very important you think about your process, your insurance renewal, and think when it's the best start to appoint a broker and work with that broker on the market presentation before you actually go to insurers from lot 1. Right, let's focus now on Lot 2, Insurance Brokerage and Associate Services. I think I would like to start from this lot because it should be actually your first step when you're accessing the framework agreement. I will talk to you about why do you need a broker. Many times I've been asked the question, why do you need a broker? Or came across statement that it's a necessary evil. So, but if you think about this, to get the best value for money and give yourself a chance to get better quotes and better covers, you need to understand, you need to appreciate that this is how the market works. Majority of insurers are broker markets only, and they require a broker to approach them for quotes. So when it comes to brokered services, obviously, you need to incur some costs to get access to the wider insurance market. But what I would advise you to do is to focus on what are you getting back for the money spent on the brokered services. Choosing an insurance broker is an important decision. Should it be only about the process, only about a step in getting more bids from insurance market, or should you allow broker to work with you, to engage with your organization beyond known risk? Broker is your full-time specialist with professional skills in handling the insurance business. The role of the broker is varied, but includes proper disclosure of material information to insurers, the negotiation of policy price, coverage levels and wordings, the provision of advice in the event of claim. The broker, using its marketed knowledge and experience, will be able to provide you with advice on existing program and challenge you around new coverage, value-added solution, program design and innovation. And please don't be worried about direct insurer. It can be accessed even though you're using a broker. You just need to make decision with the broker about how you're going to approach direct insurer. In practice, it means that it will be you who will be sending for the competition documents to the direct insurer, and it will be you who will receive response from that direct insurer. But then it still will be the broker who will do the evaluation of all the bids and we will provide you with a recommendation. So you've got two options to appoint a broker through this framework agreement. It could be either through direct award or for the competition. We will start with direct award and how to appoint a broker. Contracting authorities should call off agreement through direct award if the anticipated call off agreement spend does not exceed £10,000 per annum, if the contracting authority does not consider the services to be complex, if the contracting authority have read the Lot 2 call-off terms and conditions and they do not require any amendments, if the contracting authority have read the Lot 2 brokerage specification and they do not require any amendments. And the call-off agreement through direct award, the contracting authority should feel content with the pricing element of the direct award. Our recommendation is if you already have a contract with a broker, undertake some cost-benefit analysis, review quality of the service you currently receive, look at the framework pricing and compare it with what you're currently paying. At the framework level, we establish brokerage fees as a daily blended rate. We establish separate pricing for associate support services. And we as well cap the brokerage ISB at 3.5%. This is really important, especially when you're doing direct award. Some of the brokers on the framework decided to take less than 3.5%, and some of the brokers decided not to take it at all. So, although commission, the ISB is paid by insurer, it's always on the on top of your premium. So you can achieve some savings while taking into consideration the brokerage ISB. What are the benefits of direct award? It's quick and easy access. It saves you time and resources. You have access to approved by FCA brokers. You have got access to establish terms and conditions, to establish specification, and to establish pricing, and with ISB capped at 3.5%. When you use direct award, you just streamline your process. It gives you and a broker more time to work on your market presentation, create new solution, or redesign insurance program. Further competition to appoint a broker. Contracting authorities might decide to conduct further competition if the contracting authority wants to expand specification or benchmark current providers, if the contracting authority needs to amend or refine the call of terms to reflect its service, and if the contracting authority requires broker on lot 2 to access their requirement and propose a price based on that assessment. And as well, if contracting authority feels that the data in the supplier metric is not considered enough for the customer to demonstrate the best value. What customers need to think about that tenders for the services of a broker can be a time-consuming process for all involved. So if the value of your contract does not exceed £10,000, contracting authority should really consider direct award. Customers wishing to conduct for the competition might find that they get a relatively low responses to their exercise for value under £10,000. The benefits of the for the competition is that the framework provides you with a facility to test the market and benchmark providers. It provides you with a facility to redesign quality of the service. You can add to the core specification if you have varying requirements. You can expand, you can still use the framework call of terms and conditions, but you can expand on them and add your supplementary terms. And really, you need to evaluate suppliers on their service delivery and price, as the qualifying criteria has already been evaluated. Just one important point here. If you're inviting brokers, if you're using for the competition to appoint a broker, you only need to invite capable brokers of delivering the type of insurance brokerage and support services required by you. It means that you might invite only 6 instead of 12 brokers. And Supplier Metrics, the document I mentioned at the beginning of the webinar, will help you to establish which brokers are capable to deliver your type of insurance brokerage. These are the weightings criteria for the competition to appoint a broker. Criteria will change depending on the nature of business, your organization objectives, priorities. Selection criteria should be agreed with your internal stakeholders, finance director, IT department, board, or even non-executive directors. I'm just giving you here a couple of examples for sub-criteria on price and quality. When you think about price, brokers tend to charge a flat fee or variable fee based on their cost and profits. The fee could vary for each insurance product depending on how complex is the risk and product. But I would always encourage you to challenge brokers to achieve maximum value for money in the program design, including breadth of cover, limits, deductibles, to challenge brokers on reduction in premium. If you think about the quality of the services, there are some things you could consider, such as ability to service all areas of business, ability to place niche and specialist covers, ability to challenge the status quo, innovation and effective program design. You can ask whether brokers provide advice on risk management, whether they provide access to training. Please don't forget about access to expertise, to broker skills and experience, the quality of the service team, the claims and crisis responses. I would always encourage you to try to push broker to create competition. Last week I attended one of the brokers, Marsh, Public Entities Practice Forum, where customers were encouraged to challenge brokers on IPT. As you all probably know, the government announced a raise in insurance premium tax, meaning the rate will increase to 12% from June 2017. This is a third increase to the rate of IPT announced in less than 2 years. Brokers and insurers believe it's not the end of the story. The United Kingdom has one of the lowest IPT rates in Europe, much lower than Germany with 19% and Italy 21%. So please challenge brokers on insurance premium tax, and so they can look for you for some options for to self-fund some of the risk. I put here a question mark as well on equality versus price. This is going back to my previous question. When you appoint a broker, should it be only about the process, a step to get access to wider insurance market? Customers who put more emphasis on price or regularly test the broker to drive down fees might find that the amount of interest in their business wanes over time. Broker is your gateway to insurance market. And choosing a broker with the right skill, right knowledge, right market relationship is vital to the success of your insurance procurement strategy. So what's happening once the broker is appointed? They will work with you on the market presentation. They will review your risk profile and claims history. They will ensure you provide all information required under the Insurance Act. They will undertake further competition between insurers on Lot 1, and they will only approach capable insurers to bid for your risk. They will evaluate the bids and provide you with a recommendation. Now we're going to move on to Lot 1, Insurance and Associated Services. There are two options to access this lot. First one is the recommended by us route. It's when you undertake further competition with the use of the customer. It really generates competition and value for money. Customer appoints just one broker, and that one broker is approaching the market on your behalf, and that broker is accessing all 26 insurers on Lot 1, even the direct insurer. The second option is to undertake further competition without the use of a broker. This is not really recommended, as you're very much limiting your market. And under public procurement rules, you really need to demonstrate competition. So you really need to have at least two providers able to offer all your requirements. And at the moment, there are only 3 insurers able to deal directly with a customer. Those are Zurich Municipal, who can provide all lines of risk. Together Sure, who can only provide you with a motor insurance. And MAPS, Motor Accident Protection Services, who again, as well as Together Sure, can only bid for motor insurance. So if you look at those 3 insurers, there's no really competition between direct insurers. So I will go back to this slide and recommend the route when you actually go to Lot 2, appoint one broker, and let that one broker go out to all 26 insurers on Lot 1 and get you a policy cover. These are the weightings criteria for the competition under Lot 1. I'm giving you again some examples of sub-criteria for price and quality. There are a number of areas that should be taken into consideration when making a choice of insurer, such as cost of premium, coverage offered and exclusions, capacity, capability, claims handling philosophy. So try to ask insurers relevant questions in your further competition documents. For example, how do you manage claims? How do you handling frauds? If you ask those type of questions, you're actually showing to insurers, you're letting them know that their response will be valued. So you will encourage them to bid. When you're making a choice of insurer, ask the questions such as, does the insurer offer all types of cover? What levels of cover does the insurer offering, and what are the exclusions? How do these characteristics compare with alternative insurers? Is the insurer offering acceptable, best available policy wordings? Can they tailor the wordings to suit your needs? And what's more important, has the insurer explained the pricing cost premium decision? This is something you can take away and review before your next insurance placement. And please don't forget about insurer financial stability. Insurance is a promise to pay in the future, and the value of the promise is only as good as the financial strength of the insurer providing the promise. It's crucial that insurer demonstrates ability that they will be here for a long time and can pay claims both now and in the future. Brokers constantly do monitor the credit rating of the insurer, and on many occasions, insurer needs to pass brokers' financial selection criteria before they are approved and taken into consideration. So we're moving on now to how to get the best value from the framework. First of all, let's talk about tender structure. It's important how you present your risk to insurers. It's important how you structure your presentation, how the packs are divided with key headings such as insured interest, key changes since last year, risk management. You might be surprised, but both insurers and brokers constantly talking about this, about the look of the market presentation documents, or the look of the further competition documents. Poorly structured tender can only lead to careful assumptions being made, reflected in the price covered offered, or simply no quote. So it's very important you put some time in, because a well-presented and factual tender will actually help insurers in reaching their best price and cover options. What you need to consider as well in your tender structure is the use of lots per policy. It does encourage widest market participation. Niche and specialist insurers will quote, as well as the ones who can do everything. Insurers will not have to respond to all lots policies, but instead they can quote for one or however many they want. You can decide to use packages. That can work as well. Certain covers work well together, such as contractors work in progress, fidelity guarantee. Packages are allowed under the framework agreement, but you need to provide justification of why not splitting this into lot. And please remember, there are something that you don't have to use the framework for all policies, especially the niche requirements. Some of the insurers will not respond even to your ARJU tender, and you will still have to follow your standing orders and ask for free quotes if you would like to see a policy, for example, for terrorism, medical malpractice, clinical trials of staff absence. So I would advise you to seek advice from a broker. They will use their market experience and knowledge about insurers, and they will provide you with a recommendation on which route is the best for you. Secondly, to get the best value of the framework agreement is to try to pre-engage with insurers. Seek advice from a broker before you approach insurers. But when you think about your insurance placement, are you doing what you have done before, or are you trying to create an innovative approach? So we suggest to hold industry days, before or during the competition process. It's an open day for potential providers. Try to share drafts of your documentation and try to share your timescale with insurers. This way you will warm up the market, you will get insight into what's available, you will show commitment, and you will start building relationship with insurers. What insurers don't like is a scattered approach. They get disinterested very easily. So you will lose commitment if you are constantly out to quote. And please do not use the framework to benchmark. Instead, use the broker's experience in the sector. They will have access to the data and they will have expertise to undertake benchmarking for you. The last thing to consider and to give yourself more chances to get a larger number of bids is a timetable, is a timescale. What you are buying is a quality of service. You need to put some time to get it right, because what if you buy something cheap but your cover is not right? So it is very important that you put some time before you present your risk to insurers, especially now when the Insurance Act is live. It came into force on the 12th August last year. What you are buying is not just a cover based on price, but the service quality as well. Insurance Act is a good news to customers, as it reduces the imbalance between insured and insurer by making several changes to the policies, such as duty of disclosure, remedies available, abolition of basic contract clauses. However, the Act puts some more responsibility onto risk managers, insurance managers, in the form of duty of fair representation. Do you fully understand what, before your insurance placement, ask yourself a question. Just check, do you fully understand what needs to be disclosed under duty of fair representation? And mainly because of that new requirement, it is recommended to start the insurance placement process 7 to 12 months before the renewal. You just need to give yourself more time to evaluate the insurance needs of your organization and more time to engage with insurers and brokers to clarify and agree information requirements. When you think about the actual for the competition process, we would recommend, and insurers would ask for it, to give at least 4-6 weeks longer in busy periods for insurers to respond to your for the competition documents. If the insurer feels that they will miss a deadline, the last thing the insurer wants is to miss a deadline. So if they think they will do it, if they feel they will miss it, they will decline to quote. So please really give an insurer time to work on your for the competition documents, to work on your risk. Just ask yourself a question: would you read all documents within 24 hours, within a week? The challenge for insurers and for risk managers is massive, to get a program design and a premium which is robust enough to deal with claims reported and paid in many years' time. So when you're thinking about your insurance placement, when you're thinking about your timescale, please consider the time insurers need to respond to your documents, build in a time you need, and then broker needs to evaluate all the bids, create recommendation document, set up a meeting to go through results, outcomes of your for the competition. Think about the award, the standstill period, the formal agreement, exchange of the documents. So you really can't leave the insurance placement, insurance renewal till the last minute. Final tips. Please try and sell your organization to the insurers. In the busy periods, you might be one of 50 under review. So please try to be the best you can, as you are in competition with other organizations. Like I said before, tight deadlines will only result in underwriters declining to quote. Ask yourself a question. Why should insurers give me the best price? What will make insurers give me the best price? How can I help the insurer to give me the best cover? With insurance placement, your aim should be to get as many insurers as possible, quoting for your risk at the best price and the best cover they can offer. Finally, please use direct award for the broker in order to allow for yourself and the broker more time to engage with insurers. Please remember that our recommendation is that the broker appointment should be 6 months before the insurance placement. Use a broker to generate real competition and value for money. Try to warm up the market, give it time and share your timetable, and plan ahead to avoid last-minute rush in the busy periods such as February to April, June to August, December time. Right, before I move on to questions, I would like to make you aware about our upcoming customer insight days. We have got planned road shows for this year in May, June, and September time. They are a great offer for. We're working in partnership with insurers and brokers. Insurers are doing a presentation on claims risk, how they actually calculate the premium. You will get an update on the insurance landscape. They are very interesting sessions. Last year we did about 6 of them. They were well attended and we received a very good feedback from our customers. So please save those days in your diary. I will be sharing with you more information about those days and the topics and presenters, and I will be sending you invite to those days as well. Right, thank you for listening. I'm going now to begin answering the questions submitted during today's webinar. Just to let you know, once you leave today's webinar, you will receive a follow-up email with a link to view recording and a question and answer document. So our first question is from Rachel, and her question is, if we solely use a broker to conduct a further competition, but Zurich wins the business, will customers no longer require a broker? Well, this decision is yours, really. Zurich Municipal has infrastructure and support in place to provide customers with services that a broker would normally provide, but you can still have a contract with a broker for consultancy purpose. You can work with a broker on your risk management, on your claims handling. You can still have a contract with a broker to prepare for the next insurance placement, or even work on your insurance program and try to create some innovation. Try to look at self-funding options. So I would say again, yes, this is totally up to you. You can just you can extend your contract with a broker, or you can just terminate it once your insurer is in place. Our second question is from John, and the question is, can a broker appointed not through the framework access Lot 1 insurers? Well, when you have appointed broker outside of the framework, you won't be able to access framework agreement unless you reappoint that broker through the framework. I understand this could be a time-consuming exercise, but I would recommend to undertake cost-benefit analysis, to look at the framework pricing, to look at the ISB, framework specification, terms and conditions, and actually see which approach will provide you with the best value. I'm very cautious about the time. Like I said again, I will answer all the questions. I will create a Q&A document and share it with everyone. I would encourage you, if you've got more questions, to contact me on the details provided on this slide. Please give me a ring. Please just drop me an email. I will be happy to help you. And On behalf of YPO and other partners, CCS, ESPO, and NIPO, I would like to thank you for joining us today. If you have any other questions, please contact me, and I hope you enjoyed it, and have a great rest of the day. Thank you.